Hello everybody, good evening, how are you? It's now December the 24th. Merry Christmas Eve everybody. I hope you're spending time with family and friends. And the only reason why I am making this video right now is because I think that something drastic is going to happen very soon. Hanging out with my bestie. Say hi to the camera, Jay.
Hello.
My lady right now, she actually left the country. She's visiting her family in Ireland. So I'm going to be missing her for a little bit. She'll be back in about 2 weeks. So yeah, other than that guys, let me just talk about the market and see what I think is going to happen. And I think that you guys are going to probably agree with me because there's a lot of irrefutable evidence for what could most likely take place. So we're going to keep this technical analysis with a combination of RSI, MACD, histogram, price action, moving averages, and a little bit of Elliot wave theory as well. And we're going to keep this in a very condensed format in about 15 minutes at most, okay? So first of all, we're going to take a look at the monthly, and we see that the monthly right now is showing 2 solid months of solid rejection at the 21 exponential moving average. And we see that it has broken through the 8 and the 13 EMA thus far, but these 2 wicks are very symbolic that we could potentially see a resistance going to the downside, meaning we find support. So we take a look at the RSI MACD, we take a look at the monthly MACD, and you never know. This curvature right here, yes, it is showing on a larger degree that there will be a downtrend. But as a day trader and a swing trader, what we capitalize on are those short-term volatile moves that can yield us anywhere from 1 to 10%. And trust me, folks, I wouldn't be doing this if it weren't urgent enough. Why would I be doing this on Christmas Eve, right? Unless I wanted to just share my thoughts and my opinions with what's going on and how we could potentially protect ourselves in the weeks to come, or how we can actually find some possible plays. So right now, we see this histogram slightly starting to slightly staircase. That's very difficult to say. Starting to slightly staircase to the upside right here. We saw it happen for the first time, got completely rejected, coming to the downside, and now the momentum is slowly rolling over to the upside. We still see the weekly trending below the 55 EMA though. We see this hammer right here that has fairly significant volume. Let's take a look at CoinMarketCap very quickly to see how the overall market cap has been trending thus far. Bitcoin dominance is most likely about, wow, 68.8%. That is astronomically huge. So with it being well over 67%, which is traditionally the average, we're seeing it almost at 69%. We're most likely going to be seeing 24-hour volume increase over the next few days as well, in my opinion. Go to historical data here. And now we see here that we were decreasing. For example, the second week of the December, 17, 17, 16, 20, 22, 32. Dropped all the way to 19, 23. Huge drop right there. Or is that the rally? Yeah, that was the rally. And now 23 billion. And today, averaging as the same as yesterday as well. So far, it's looking pretty decent. Now, what I want to make a big note of is this right here, okay? This is my success formula, as you folks know. My favorite formula for MACD goes something like that. Okay, that is the long moving average. That's the 26 moving average. And this one right there is the short moving average, right? So what we want is that crossover right there. The first crossover that happens is right there. The second one that happens is coming back to the downside right there. And the third one is the one that we want to focus on. If we can catch when the momentum is starting to roll over to the third one, it's a fairly decent sign of a decent rally. Not only that, we see the histogram curving up to the upside. We see the first crossover to the upside, the second crossover to the downside, and now the third crossover is likely to begin as well. And this is also on the 3-day chart, which is very significant in my opinion. On the 2-day chart, it has already happened right here, right? Here's the one crossover up. Here's the one crossover back to the downside. And here's another crossover up to the other side. Okay. So now we're going to go over a quick Elliott wave analysis as well, and check out this histogram peaking to the upside, looking fairly decent in every single way thus far. Okay, so now we see on the daily that we're contesting right between the 21, the 13, and the 8 EMA that is sandwiching really closely between 7,600 and 7,300, with this one wick almost touching the 55 EMA. Alright, sorry about that. I kind of lost my train of thought there because a quick friend came over. So looking on the 12-hour right now, we see that we're finding support above the 21 EMA. You know what? I'm just going to jump to the most important thing in my personal opinion right now, okay? We're going to jump into Elliott wave theory. And the way that I'm seeing the Elliott wave theory is like that, okay? There's the A, B, C originally. Here's the A, B, C going upwards. There's the X. Here's the A, B, and the C coming down here. Here is another X. And now we're looking for another Z, okay? These were easily identified in previous videos, where this was the ABC, that's an ABC up there, this one is an A, B, and a C down there, and this one in particular was interesting because the C ended up going further for this particular A, B, C within the A to the B. So this B is lower than the A, okay? And then now the way that I am seeing this is a 1, 2, 3, 4, 5 coming to the downside. 1, 2, 3, 4, and this is a very difficult 5 to be placing in my opinion, because if I were to take a look at this, it's incredibly difficult for me to count 5 particular waves, and therefore I'm not going to count it like that. I'm going to actually count it perhaps like here, or even right there, okay? Where this ends up making a 1, 2, 3, 4, and a 5 for an ABC, which makes the A. This is most likely making the B right here. And there's a C right there, okay? And this B could be even right there, perhaps. And then if we counted it like that, that we can easily say that there's a very high potential for this to make some sort of leading first wave diagonal going to the upside. But that's also hard to say as well if we draw it like this, okay? So let's just say this was 2, right? This ends up making some sort of expanding triangle, which I do not like whatsoever. Or even a channel going to the upside. So this could be 1, 2, 3, 4, and a 5 going up there. But we see that the first wave right here is by far the longest, right? Either way, what we're trying to conclude is that the 5 waves here are done. And within X to Z, there's going to be an ABC. So now we're trying to prove our case that these 5 waves are originally completed, and we will get some sort of B retracement to the upside, and then we get a C coming to the downside. Assuming that ABC even does a very simple proportional 1-to-1 Fibonacci extension, and assuming that we get anywhere between a dead cat bounce to a golden ratio bounce. So let's just say worst case scenario, we're taking a look at B right here, that ends up at $8,000, which is realistic for a dead cat bounce. We see that at a 1-to-1 extension, the target is $3,750. I know that's the last thing you want to hear, okay? Assuming that B gets all the way up to 0.618, which is the golden ratio, then what we can easily say is that the next target is roughly above $4,900. So these are 2 possible cases where we're seeing anywhere between $3,500 to $4,900 as a support, assuming that this is 1, 2, 3, 4, and 5 coming to the downside with an A and then a B and a C. In my opinion, it is refutable, but based on all the confluent reasons that I see thus far, it is irrefutable. So if I were to draw my parallel channels right here, and I looked at this from the best case scenario, what I'm seeing is that this channel right here, okay, so take a look at this right here, and then I go with my Fibonacci extension, for example, what we see is that if it does hit the top of this peak, you know, here's a very, very possible chance if we end up expelling upwards exponentially to here, then we would yield ourselves a beautiful $9,000 target just for B alone if it were to hit 618. If it were to be elongated, and it takes a little bit longer than we thought, the next possible paths based on this telemetry right here, based on this parallelity, based on this channel that we see that has now been formed for over a period of 180 days, which has been 6 months. Depending on how long it takes to go there, we can see one possible path for 618 fib, second possible path to 0.5, and a third possible path to 382. So we see one target there at around 9,000, and then 85, and a possible 8K. But for now, because the 3-day is showing many bullish signs of recuperation to the upside, and because we're seeing this particular formula for success and crossover that I see, also we're seeing it being steadily curving up to the upside that will eventually make some sort of convex shape. Remember my two different, this is a concave shape. A concave shape, think of it like a cave door that opens to, right? A cave door, or the entrance to a cave. And then convex is the opposite. We want something that's convexed to the upside, and that's what the 3-day is showing thus far, even based off of the RSI. Okay, so right now, let's give a general consensus for my thoughts. My general consensus is this: if we do break to the upside, we have a lot of challenges thus far. Okay, one of the major challenges that we'll always be seeing is basically between 7,600 and 7,900. If we break above these particular structures right here, we can easily see it shoot up to 8,000, but it will be a very contentious area of loss of resistance. But realistically, I would say more so the $7,600 range is going to be an area of resistance. If that breaks, we'll see you at $8,000. If that breaks even further, we could see ourselves at $8,500, okay? And on the downside, if this were entirely wrong, and we are indeed much more bearish than I thought that we were, then no doubt in my mind, we will be challenging this specific support first at $6,500. Watch this. This is the line that I just drew right here. Do you also notice that it is pretty much the median, the middle, the average of the breakout before it went to the downside? When we had this, when we reached our February 6th resistance, do you remember this right here? February 6th went to the upside, came back here around April 6th, upside, and then around July 6th, around there, upside, and then we hovered here until it reached a very climatic point that we call an apex. Upon an apex, it is the tension between the bulls and the bears. Bulls are pushing down, bears are pushing up. Eventually, it reaches a very climatic point called an apex where a decisive move will be made and a decisive victory will be gained as well. But keep in mind that with every single battle, because it's lost, it doesn't mean that the war is lost entirely. So we can easily deduce that this was the point of capitulation. And with the point of capitulation, it also implies heavily that it will also be the point of support if we were to reach there again. Therefore, it's my responsibility to assume that a pattern has been held thus far, and because we have held above $6,500, the next mode of support will always be $6,500 until proven otherwise. Make sense? And on the upside, if we do break $6,700, we will see the $8,000 range, okay? So guys, it's time for me to take off. I've got my beautiful company here, Jay. Want to say bye to them?
Merry Christmas, guys.
Missing my lady right now who's overseas. It's kind of sad that I'm not going to see her for about a month. So other than that, guys, have yourselves a great night. I wish you all Merry Christmas and a Happy New Year's if you don't see my video any further. And don't forget, folks, okay, I'm going to show you guys the curriculum if you're curious about it. If you guys do not have my course before 2020, you snooze, you lose. I'm now 9 videos out of about 40 filming for the updated and the revised version, which is going to cover more material, and it's going to be much more concise and clear as well for much better understanding, and maybe you'll learn some things or two. Anybody who has access to my course already prior to 2020, you're going to get it for free. And guess what? My course will be entirely removed off of the internet, and nobody will get access to it again. The people that already have access to it on Udemy, you'll be updated with a newer version of the one that I'm revising for free. The people that have the download links already or a hard copy, you guys are going to get the brand new version for free as well. But those that don't have it, and you guys are too slow, tough luck. If you message me on January the 1st and ask me to purchase my course, you will not be able to purchase it, and I guarantee it, because I'm always a man of my word. So if you guys are curious about it, let me know. My course goes for 180 American dollars by crypto. Check out the address below. All you got to do is just send the crypto. DM me your screenshot of it, and I'll get you it as soon as possible. Alright, guys? And you know what's cool about it? It's a fraction of the cost of all the other crappy ones out there. And I think that my reputation stands for itself because I'm Philip Crypto. So anyways, have yourselves a Merry Christmas. I hope you spend it with a lot of time and family. And most importantly, I hope you take care of yourselves and treat yourselves once in a while as well. Have yourselves a great night, and thank you for all the love and the support. Jay, let's say goodnight to all the followers.
Good night, all followers.
Have yourselves a great night, guys. Take care. Bye now.